I have the privilege of welcoming Bill Borden, Corporate Vice President for Worldwide Financial Services at Microsoft. My name is Youssef Sneifer, and I'm from the law firm of Perkins, Coie, and I'm so looking forward to spending the next 25 minutes, Bill, talking about the critical issue about the role of financial services and technology in advancing financial inclusion and social justice and empowering financially underserved communities. Bill, first of all, welcome. I am so thrilled you are here, and I'm thrilled to have this conversation.
Hi, Youssef. Hi, everyone joining in. It's a pleasure to be here and fun to sit down, to spend some time with you today.
Thank you. Thank you. I'm eager for us to hear from you, so let's jump right in. And let me tee it off with this. Recent months and recent events are shining a bright light on social justice issues in our country and have had the profound impact that they've had on people and communities of color in our society. For the financial services industry, these events are also highlighting the underrepresentation and the underserving of people and communities of color right now. You have been in the financial services industries for over 20 years, and you recently came to Microsoft. Bill, can you share with us your own observations, your own reflection of where the financial services is at with respect to these issues, and tell us a little bit about your experience and your own observation of how these recent events are impacting us and impacting our industry generally.
Sure. I've been in technology my whole career, starting out in technology before joining the banking industry. So it's been a mix. But personally, obviously, I've been a consumer, and I've been part of a family that grew up and have several stories historically around the financial services industry and the impact that it's had on my family. So my parents are from the South. They grew up in the South. They grew up very poor. They grew up on a farm. And so through my childhood and raising, as my parents transitioned from the South to the Midwest, to the Chicago area, and ended up living there most of their lives, and really in the establishment of their families, raising their children in the Midwest. That hearing your parents and your grandparents talk about the difficulties of what it was like to get credit, or the difficulties to get a mortgage back in the 50s and 60s and 70s. You just hear that as a kid growing up, right? And you hear that with your relatives talking about how difficult it was as well to get loans for their business. So I kind of grew up with this environment of banks being a challenge for minorities in a lot of different ways. And then now I end up in the industry and been in the industry for years. And you've seen the progress, but you've also seen the challenges with regards to still the lack of financial inclusion really at every level in the financial services system. And a recognition of that has to start first, right? Understanding that there are still issues with regards to access and inclusion, and what that means to the Black and African American community in particular, but people of color in this country and outside of this country. And is the lack of inclusion kind of a symptom of the problems that show up in the data in terms of the impact, or is it a cause? And I think it's both. And the statistics are pretty clear around what's happened in terms of net worth of households. White households tend to have 10 times more median net worth than Black households. Median income of Black households is less than 60% of that of white households. The poverty rate of Black Americans is double that of whites. There are a larger share of Black African Americans that have health insurance. So the idea of having the ability to transact, the ability to have banking services available to you, the access to credit, the access to insurance, all have an impact on your life. And that impact in terms of participating in the growth in the economic economy and jobs is an impact as well with regards to what access and services could mean to this community and what it could mean to this community actually driving more in terms of the growth of our overall economies. So I felt it personally. I've been involved in it, in being in institutions and being in programs to try to help look at the symptoms and look at what can be done. And I think it starts with first understanding where the sources of exclusion are and then drilling into fixing them. And I think the use of technologies, the use of having more diverse populations in the employment base and making decisions is a big part and a big start of that. And I'm excited to have been a big part of that. And it's got to continue because the facts are it's not moving fast enough.
That's right. That's right. That's right. Bill, you hit on a critical point with respect to access to financial services and use of financial services. It is a fundamental. I don't want to call it fundamental human rights, but it is a foundational element for the businesses and consumers to reach their socio and economic goals and in general. And yet, study after study, as you cited, Bill, continue to show that the financial industry is underserving people and communities of color. You listed a few statistics, but like recently I read, nearly half of Black households in the U.S. are either underbanked or unbanked. That's not the picture of inclusion that we hope for. So, what do you think the financial industry is doing right? And what do they need to continue to do to improve and change these studies and these statistics that are really astonishing sometimes when we look at where we are in the 21st century and where we should be going forward?
Yeah, that's what I was saying. It's having the understanding around where the exclusion exists and understanding that there is exclusion going on, and it is systematic, and it is driven by bias and unconscious bias, sometimes conscious bias and unconscious bias. And so I think the focus on what's happening in the community and understanding the facts and data is important. So, for example, the majority of African American small and medium sized businesses produce the majority of jobs in the Black and African American community. The majority of those small and medium enterprise businesses get loans not from traditional large universal banks and regional banks. They get it from community development investment banks and minority development investment banks. So that's the channel of capital that's driving lending into Black and African American small and medium sized businesses. But that access of capital in that channel is severely underserved in terms of technology. These are small lending institutions that don't have the latest technology, but they are viewed and relied on by that community of businesses for loans. And that's for a lot of reasons. One, in terms of the ability to actually get approval for loans, and so that has to be looked at. And as I said earlier, there is a mindset that's embedded in the community as well around if I go to a larger institution, one, will I get a loan to begin with? So why bother going through the process? And that is inherently discussed around kitchen tables and in the mindset of Black and African American communities. So understanding that and understanding access, what does that mean? So how do we, if that's the case around where lending is occurring, how do we actually help those institutions grow and flourish and have technology to actually move the lending process and have capital available in a much richer way, as an example. I also think it comes down to thinking about, and you can get very surgical around access to branches and institutions. If you look at studies around where bank branches are located in the communities, the ratio of bank branches in poor is different than the ratio. It's much lower than the ratio of white or higher income communities. And so from a perspective of economics, that could make sense, but from a perspective of, well, wait a minute, this is an underserved community. We need more banking services in the community, not less. So how does the industry balance what it has to do from a P&L perspective to what it also has to do to ensure that we're also enabling the advancement and the growth and development of people in these communities?
Yeah. That's amazing. Sometimes, Bill, it's hard to look at hope and optimism in this situation, unfortunately. But we know that change is happening, and we all have a role to play in effectuating that change. I know that you and Microsoft, from Satya to other leaders, believe that technology and technology intensity will play a critical role in that change. And as I'm hearing you about access to branches, etc., I cannot help but think about how digital transformation in the financial services industry can bridge that divide, can deal with these issues. Can you elaborate a little bit around the role of technology, the role of tech intensity, as you guys, within Microsoft talk about it, and within the industry is going to play to help move and move us in the right direction and implement changes that are impactful on our communities?
Sure. Satya, our CEO, talks about tech intensity a lot. We talk about it broadly. And it's really driven behind how we're trying to bring our mission to life every day. And our mission is to empower every individual and every organization on the planet to achieve more. And in order to do that, we believe that the democratization of technology and the availability of technology and the ability to use it, and the democratization of data and the access to data to make decisions, if we can make that more usable and more accessible to everybody, that companies and individuals can achieve more, and that transformation can achieve more. And in the financial services industry, we're seeing that quite a bit in terms of the transformation of creating a different digital experience for individuals and institutions and governments to have access to financial services. And that experience comes through access through channels, mobile and internet, and being able to bank 24 hours a day, 7 days a week. And then within those channels, being able to have access to information and data that's personalized to actually serve the needs of you as an individual or the needs of you as a organization or institution, to have the products and services that are right for you at the time that you need it. So that life stage of having access. And so technology is driving the advancements of that every day. And we've seen tremendous and terrific examples of that, right? The unbanked populations in Africa actually were able to leapfrog the fact that the infrastructure of telephone lines and hardwired lines to drive the internet was not available to them, but mobile access was. And the idea of the mobile devices and what's that's done to be able to provide banking services to communities in Africa has been tremendous. And you see that today in terms of access, around the ability to have access to your banking services 24/7, 24 hours, 7 days a week. What has to be extended to that is beyond that access, it's what's getting really specific around my point earlier around the needs of the community around when they need it. Why are there differences between access to capital? Why are there differences between how mortgages are underwritten differently? Why are there differences around geographic availability of branches? So as we uncover those questions, you can apply technology to that, whether it's machine learning or artificial intelligence, et cetera, to actually get at those decisions. And another interesting thing that we're doing around our responsible AI is actually, if you're going to develop responsible AI and take bias out of the algorithms and models, the people that are writing those algorithms and models, you need to have diversity amongst your development teams to be able to do that. And so it's a big focus as well in the tech industry to actually think about how do we create more diversity and inclusion in our developer communities to actually help drive and build these models, so that if you've got, for example, research shows that 80% of the lending officers in the US in the industry, or 80+%, happen to be people of color. So if you got majority people doing the lending, is that inherently going to create a potential environment of unbiased decision making? And we've seen it kind of play out in the data. So it's technology and the tech intensity, but it's also diversity and inclusion combined with that. Diversity and inclusion in terms of decision making, people in power, people in management structures, diversity and inclusion in the developer community in terms of who's building these products, and in the engineering community in terms of who's building the access and the tools. And the combination of that to solve is where we're really trying to push. Is looking at this in a much different way around how do we look more directly and more hands-on in communities to actually understand what's happening and to get underneath the challenges of what's occurring. And I would say after the George Floyd incident, the financial services industry in the US in particular has aligned by announcing dollars for investment in project and activity, dollars for investment in terms of investing into the communities. So real hands-on experience to actually work with governments, work with technology companies, work with other partners in the industry to think about ways that we can drive access, drive lending, drive education and training, to drive financial literacy. A whole host of programs are being thought about to actually apply in a sustainable way.
Yeah. That, you know, I'm hearing a little bit of a hope, you know, Bill. Is this potentially that these events in recent months, as unfortunate as they have been, may be leading for us to wake up a little bit, and across the community, across the financial industry and across technology industry to really kind of accelerate that change. And I'm continue to hope and be optimistic about the future in that sense. Bill, to shift gears a little bit, but along the same lines, you know, a key stakeholder in all of this is the role of regulators and the role of policymakers in advancing social justice, financial inclusion. And we are seeing some positive steps that regulators are taking. The FDIC has an Office of Minority and Women Inclusion who is trying to support minority deposit institutions, these community institutions that you mentioned in the beginning. And the OCC, the Federal Reserve, are doing the same and have similar initiatives. My question to you, what is Microsoft doing, or should, in your opinion, should be doing to support these initiatives by regulators and to advance these causes that regulators and policymakers are pushing in there? Is there more that these regulators and the policymakers should do in that regard? And I know it's a broad question, and I don't mean to put you on the spot to talk about policy and issues, but I would love to hear your opinion as to what you think that, you know, how do we continue to support these regulators and these policymakers to advance the issues that we talked about today?
Yes, look, problems are large, and there's a lot of history behind them, which has driven a lot of the ingrained systematic challenges that are kind of embedded in the system here around cause and effect. And so it's going to take private sector, it's going to take public sector, it's going to take social organizations to come together to jointly come up with ideas. And as you said, the FDIC, Treasury, OCC, and others are thinking about, from a policy perspective and from a perspective, what can take to and to support the availability of capital and to support training and education. And at Microsoft, we certainly are working with understanding and working in partnership with the government at the federal level and the local level around what policies are in effect and can help support this program in partnership with the idea of working with the financial services industry, along with technology to see what solutions we can actually bring to bear and bring to bear at scale and bring to bear with agility and quick. An idea, as I alluded to earlier, around the source of capital to small and medium enterprises in the Black and African American community. And community development investment banks and minority development investment banks are the source of the majority of that capital. So what can we do to actually help provide technology to actually allow these institutions to have modern technology, modern underwriting platforms, modern lending platforms, modern platforms to actually work with these businesses to actually help them understand not just how to get the capital, but how to use the capital effectively. So there's technology behind that. There's policies and programs to actually work in the industry to make capital available to help support and maybe underwrite some of the investment in that technology that's needed by these institutions who can't necessarily afford it out of the gate. There's also policies and programs in partnership with the private community that get involved in lending, get involved in education and training and development. Because getting capital is one thing, helping small businesses understand how to market themselves, how to find customers, actually how to grow their businesses is another element of that, which again is another area that we're also focused on, right? Besides the technology for the lending institutions, what are the technologies and capabilities that we can offer to these small businesses as tools to actually help them run their businesses better, more efficiently? That leads into talent, right? And education and training for small businesses to actually be able to go to the outside community and attract talent. So there's a link back to work that we're doing in investing in universities, particularly historically Black colleges and universities, around training and development and talent. So all these things interact around what the private sector, the public sector, and social communities can do around solving the problem. It's not one thing. It's a collection of many things and activities that we have to bring together.
Yeah. This is fantastic, and overall you brought it back together. You know, kind of as I think about kind of our audience here, a lot of great financial institutions and fintech companies. Bill, do you, in your mind, is there a call to action by the to the financial sector, to the financial industry, to our fintech companies and colleagues in all of these companies to really kind of continue to effectuate change and help advance social justice and financial inclusion? What's your call to action in your mind that we all should take from this?
Is everyone needs to, step back and kind of hone in on where they think the particular challenges of exclusion are occurring. And from there, how they think they specifically as an organization and institution, and then individually as human beings in our collective society can work together to actually, with eyes wide open, understand that there are problems, and then hone in on where we can actually apply resources collectively to help make the change. And in order to do that, I think you have to then think about the teams that you have in place, thinking about solving those problems. And I would say that there's probably, as an institution, we've been very focused on, just looking inside our own walls at Microsoft around what do we need to do internally to actually have a more diverse and inclusive work environment, which means how do we actually bring in, train, and hire more diverse people in our workforce? Because the numbers of Black and African Americans in the tech industry is not very high. When you look at other industries, it's certainly not anywhere near the population distribution of the U.S., right? 13% of America is Black and African American, but we're not anywhere near that percentage in terms of hiring within the tech industry and within the financial services industry. I think studies have shown that 7% of the director level jobs in the financial services industry are Black and African American, and 2% of those are in senior positions. So I think it starts with the understanding that diversity and inclusion means having representative people that are working on solving the problem, and also representative people that are actually making decisions in terms of the execution of those products and services that are being delivered. So as I said before, right, if the majority of people who are making the loan decisions are not people of color, Black and African American, are you going to inherently have natural bias in the equation? Probably. If you look at the regulator community, it's the same way. The numbers of Blacks and African Americans in the regulatory community is not representative of the 13% population in the U.S. So again, and look, the data bears out, right? Organizations that have diverse senior management groups actually are performing better, right? Organizations that have women on the board are performing better, right? And we believe that as well. And like I said earlier, we're particularly super focused on this with regards to the use of technology, right? Responsible AI with regards to ensuring that we build products and services that don't have inherent biases in them is critically important. And how we use that technology and roll it out is going to be critically important. And so the idea of the focus of having diverse teams and diverse development teams and diverse decision-making teams and diverse auditing teams and governance teams around the use of that technology is critically important. And so I challenge, the financial services industry. I challenge the tech industry. I challenge the government regulators and the auditors, if you will, of the finance community to all be looking at that. And then my last point will be, I hear this a lot, and actually a CEO of a major bank in the US kind of made this statement and had to pull back on it, but it was this, talent is hard to find. It's hard to find the pool of talent to actually go out and hire. Well, we have to go out and we have to create that talent. We've got to go out, we've got to look at universities and find the talent because the interest is there. And we have to make decisions to give people a chance who might not necessarily have the exact profile that you're looking for, but could very well do very well at that job. So kind of take a little bit of the restrictions around how you look at resumes and backgrounds and actually take some chances on actually putting people in situations and giving them a support structure so that they can be successful. So all of those things are capable, and I think a lot of institutions are talking about them every day right now with a lot more intensity.
Bill, what a privilege. Thank you for your insights. Thank you for your time. It has been a pleasure to talk to you. Thank you.
Thank you, Youssef. Appreciate the support, and hopefully everyone's having a terrific conference.
Thank you.